everyone, welcome to Breakout Wednesday. It is November the 20th, 2019. It's about 2 p.m. per time, 5 p.m. Sydney time, about 1 a.m. New York time on the Wednesday morning. So here's the chart of the NASDAQ. It's still in a raging bull market, making new all-time highs pretty much every day. If you have a look at the Aussie chart, it's a bit frustrating. I thought we're breaking out of this basing pattern, but we've come back into it. And so most of my trading is still confined to the NASDAQ market and not the Aussie market. And so today, what I'm going to do today is, first of all, this talk is only to do with my short-term trading account, not my long-term investments. In the talks in weeks 1 and 2, I talked about stop loss placement and how I ruthlessly cut any stock that's not performing incredibly quickly, but I haven't really talked about that much since. And I'm going to talk about today, especially with the NASDAQ trades I've been in, and just explain why I think it's make or break for traders, depending on how you manage a trade. It's easy for just for someone to do scans and find a bunch of stocks which look like they're setting up and about to have breakouts, blah 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 blah. But that's not where the money's made. That's only the start of the process. It's how you manage those trades and how you cut your losses and how you manage your losers and your winners and all that sort of stuff, right? And so the mainstay of this, and what you read about everywhere, but it's a lot harder to do in practice, is that you need to cut your losers and you need to let your winners run. And so most people do the opposite, right? They hold in the little losers, hoping it's going to come back, and they cut their winners because they're so excited they just got a profit. And if you take small profits in trend trading and position trading, momentum trading, whatever you want to call it, you're never going to make much money. Okay, the people that make substantial amounts of money are the people who have the what it takes to sit with winning positions and let them run. Okay, until they're showing signs of exhaustion or turning around and turning back down. And so I'm going to actually just try and go through some examples to along the way today, just to show what I actually mean in the real world. Okay, first of all, last week I forgot to talk about one particular stock, PAR. Frank talked about it though on Friday night. For those of you who are not members of Pro Trader, Frank Watkins does a talk every Friday night. He's been doing it for since I joined, 2000, whenever it was, 5 or whatever, and they're really good, and he finds stocks which are about to break out, and he found PAR, and I had it on my list to talk about last week. I just kind of forgot, as I sometimes do, and but it came up in Davis box scans, and Frank talked about it, so hopefully some of you got that. Okay, moving on, I'm going to rattle through a bunch of stocks, and then I'm going to find some stocks to talk about the stop loss stuff in order how I manage these. Apple, in that, it never showed me a loss, and it's just a kind of a lockout rally that just keeps going. So that's cool. 88, one of the Aussie stocks that I am in, broke out this week, and I've added this blue moving average line to the volume, and what you want to see is that on a breakout you want to see the volume a lot higher than that average line, right? And so we had a big day volume on the breakout, we pulled back on small volume, and the general market all pulled back today. And so 88, I'm still hopeful on that. I have a tight stop loss on this about below 7.80. Okay, and if I get whipped out, that's life. I will keep watching it, and I will keep moving more money into NASDAQ stocks which are breaking out and holding their breakouts. But it's a really good setup. Statistically, in a strong market, this thing's just going to fly. All right, so I'm going to stick with that and hope and see what happens. APV, talked about last week, had a breakout, tiny little stock, and it's gone nuts, and so that's cool. AUDC. Audio Codes is an American stock which I've talked about the last 2 weeks. It broke out, big volume, long that, and I have a tight stop loss at break even already. So I don't want anything to do with this. It starts falling back into its base. I want this thing to go for it. Otherwise, I'm going to be out of there. Now, one of the main stocks I talked about last week, AMD. Okay, it had formed this Davis box here, and it broke out and went for it. Now, this is just the sort of perfect trade that. In a raging bull market, I just need to take time again. It was in the best sector, the semiconductor sector, which is going nuts at the moment. Above all its moving averages, got blue sky above it, had big volume on the formation, a little bit of drop off in volume during the Davis box, and then volume expansion on the breakout. And so I've trimmed about 1/3 of the position at $41, and I'm letting the rest run. Okay, and so I've still got most of my position on that, and this is where the money is. If you can, you only, out of every 10 trades I have, if 9 of them stop me out for pretty much break even or tiny losses, and one of them just goes nuts, like this one looks like it has already, and it looks like it might keep going, that's really all you need to make money, okay? You know, you don't need to have a success rate of 50 or 60 or 70%. You know, I know traders with success rates of 10 to 20% who make ridiculous amounts of money, okay? And so the way I figure out how much to buy, so let's say hypothetically you have a $100,000 account, okay? And, you know, let's say the breakout level here is 37.18 cents, and I figure out my risk based on the bottom of this range. That's not where my stop loss is going to go. That's just where my risk level is. So if this breaks out and the next morning it gaps down, and say I get I've got stopped out. Who knows where the hell it is? But let's say this is just an arbitrary place. I think maybe I'll get stopped out there. Okay. So let's say I get stopped out there. That's how I figure out my position size. So let's say a hypothetical $100,000 account, okay? Let's say that's a 5% move from 37.18 down here to whatever that is, 35.40, okay? And so that means if I'm risking 1% of my account, that's $1,000, and then if this is a 5% move, then I can take a position of $20,000 in this stock, okay? So if $20,000 falls down here, that's a 5% fall in at $20,000, that's $1,000, okay? And so I've just lost $1,000 of my $100,000. However, if I'm not gonna have a stop, you know, 99.99% of the time, my stop loss is up here below the breakout level. Okay, so if this breaks out and fails, I'm out, right? I don't lose $1,000. I lose maybe $50 or $100. Such a small loss that it doesn't even register as a loss. Okay, it just, you know, and then when I win, let's say on that $20,000 trade, your hypothetical account of $100,000, when you win, if this thing just races up and say, you know, you might win 3, 4, 5, sometimes more, heaps more, okay, per trade if you get those real blowout winners, okay? And so you can see by taking a lot of $50 to $100 losses, it just means that, and then if you can actually just sit with the winners, then it more than makes up for those tiny losses, okay? Now let's just another real world example. So let's just move on to CRUS. I was talking about last week that I liked. CRUS broke out this Davis box here on the 15th on tiny volume. Well, it was below the average volume, 30-day average in volume, and then I put my stop loss below the low of that day. So I think I got filled at like 72.58 and I got out at 72.48. The loss was so tiny that I just don't care, and I got out of that. Now, whilst that was all going down, there was this other stock setting up that I like the look of called IMMU. So I'm actually just going to show you my brokerage chart on this. So this is IMMU on my brokerage account. There's so many people in this industry that talk about crap and they don't actually do it. So I'm just, you know, because I didn't talk about this before I entered it, because I'm doing it, you know, the day after entry, I just want to show you my live chart. So this changes color when you go long. This is Interactive Brokers chart. This changes color when you go long. So I got long at this level. Here's my stop losses in. So I have a stop loss here at 16.99, which is below these lows. That's my initial stop in case last night when I was asleep, it broke out, went for it, and then just turned around. So I need some sort of comfort when I'm asleep, right? That would have lost 1% of my whole account. But now this thing's going to get moved up here, right? So let's just move it up to, you can just grab it, move it up, okay, and it's going to get moved up to the below of that breakout. So it's a 17.69. So I think I got filled at 17.88, and now my stop loss is 17.69. So if I get stopped out, I couldn't give a hoot, right? Because it's going to be such a small loss. Whereas this broke out on nice volume. Actually, the volume wasn't that good, but it broke out and it's a huge up bar, and it's looking good. And if this can be a runaway winner, then my risk reward's ridiculous. Okay, I'm risking like $100, and I have the ability to make thousands. Okay, like many thousands if this can just run away with it. Okay, so let's go back to the chart. So here's the chart back on ProTrader. This is how I found it. I found it through the ProTrader Davis scanner, it's there's heaps of stocks in here. But for anyone listening to this, there's so many new members at the moment. Anyone listening to this who, you know, this is the scan I do. I go up to that thing, I press Sam's Davis box, and I usually have first box ticked. Any box ticked, I meant to say, but I just unticked that, so it actually showed this chart from yesterday. So I'm in that. It didn't break out with good volume. It's kind of average volume, so I'm pretty sus of that breakout. It looks good, and it's, you know, your first instinct is just to, like, you know, jump up and down and get excited, but the volume's crap and I'm wary, and if the volume's crap tonight, I'm going to bail and I'm going to take my money. You know, I need remember, a breakout to me is like a party. If you rock up and no one's at the party, you're probably just going to get the hell out of there. It's the same with a breakout. If you rock up and you trade a breakout and it's shit volume, then why do you want to be in it? It's meant to be on huge volume, and stocks, to really have massive moves, you need volume behind it. And I've seen stocks fall on tiny volume, for months and months on end, but I have never seen a stock go up for weeks and weeks and weeks on tiny volume. Okay. Anyway, enough on that. Moving on to a few more. So BAP, talked about last week how it needed a couple more weeks of consolidation. It broke out, it whipped above this high, came back down. So I didn't trade that. Obviously, it needed a lot more consolidation. But if I did get caught in that, then I would be out already. Okay, instead of waiting for it to come down here to this low, if this was a short-term trade, I'd just be long gone. I would have forgotten about it already, and it's kind of ancient history. BFG. Bell Financial Group, base in, it's a pretty boring company. Unless your Lord starts breaking out, I'm going to leave that one alone. But it's a decent setup. BWX, I talked about this months ago. I bought this flag breakout here. It's never shown me a loss. I talked about how I had a profit target up. It was about here. I never hit it, and it went sideways for ages. And I had this break-even stop loss in that never got hit. And finally, it got hit last night, and I kind of got a bit naughty, but I kind of half forgot about this trade. Anyway, I'm out of half of that, and the other half's just going to let run, and I really have not thought about that stock much, so that's cool when that happens. Just moving on to the next one. So that's in the wrong account, guys. That's in a long-term account. Let's not talk about that. PMV is another one I talked about last week. How I mentioned I wasn't going to trade it unless the All Lords broke out from its base and held it. And the All Lords have not done that, so I did not trade this. But if I did happen to trade it and got caught in it, I'll be out of that, right? The low of the day, the breakout, and a short-term trade would be long gone. So this thing would be out, and I would be for a tiny, tiny loss. Compare that to having your stop loss down here at the bottom. I just think if you're risking 1% of your account, it's in a choppy market like this, it's easy to have 5, 6, 7 losing trades in a row. If you've got a $100,000 account, that's 5, 6 grand you've just lost. And to me, that's it sounds better to lose $500 than $5K, right? And so if you lose, that's I like those maths a lot better. So for short-term trading, I'll just take, as soon as I see red, cut it, move on. And all you need to do is 1 in 10 or 2 in 10, or eventually you'll hit 3, 4, 5 in 10 breakouts, which absolutely just go nuts and never look back. So a few other trades. Google, I'm still in it. It's going up a little bit, but it's had 2 down days now, so I have a tight stop loss on that. Microsoft was in a Davis box. It's still going up. It's pretty much making new all-time highs every day. I know this is a big, boring, slow-moving stock, but gee, that was just such a nice base on base and a pattern, and it's just going up every day. So LULU keeps making new all-time high, and the other one I talked about, I'm still in LULU, and the other one I talked about, ISRG, broke out and on a tiny bit above average volume, and then but it just gave this big doji kind of wick bar there, and then I moved my stop up to the low of this bar, which was 567 and 50 cents. I nearly got stopped out last night. It missed my stop by 25 cents, and then it's gone up. And okay, so I'm still in that. I'm in the money with that one now, but the volume hasn't been spectacular, so I'm going to be hunting for other trades, and then I will, if this one isn't picking volume and moving quickly, I'll be bailing and moving my cash into something that's exploding. All right. Okay, so in terms of stocks setting up in Aussie, there isn't really much. To be honest, I'm not looking at anything. Okay, there's ones I've talked about before. SCI, I mean, it's still just base in. NAU I'm watching, I guess, but it needs to tighten up and base. I thought it was tightening up there for a while, but it looks like it's broken it down today on a bit higher volume. But I'm going to keep watching that one. I was watching WAR, but NWR, but kind of not so keen on that. And in the NASDAQ, there's heaps. GFN setting up, a financial stock. The financial sector in the US is really strong as well, and GMED setting up in a Davis box scan. Okay. And so that's about all. I really like the whole cut in the short term trading, cut in my losing trades ruthlessly quickly, and it works for me. I think I forget how many years ago I started doing it, but it was ages ago, and I think prior to that, for the short term trading, I was kind of, be honest with you, a bit on struggle street, and it changed everything for me. And it doesn't mean it's going to change anything for anyone else, but the managing the trades once you're in, it's really nice mentally just to cut shit trades, and just move on. And once you get good at breakouts and selective, and you be patient and wait for markets to set up and the indices to be flying higher and bull markets to be happening, and everything's a lot easier in a bull market. All right, catch you everyone.